Welcome back, passive income investors. Like today, we're going to break down that Disney stock. I'm sure you've heard that Disney is on fire lately, guys. In the last few days, Disney has exploded because of some news that came about a new streaming service. But that is not why I want to make a video on Disney. I don't care that it's up this much, but what I do care about is that hype and the craziness going on about this. And I want to start by showing you this little video that I just stumbled upon. And I just want to give you a little quick insight here. Let me turn the volume. Let's max this out. Turn that up. Turn that up. There we go. Take a listen.
Like higher. That's my assumption anyways. Because, you know, it looks like the trend is changing and it's on an uptrend right now. Disney looks like on an uptrend. You would have made bank if you bought Disney at 108, but you know, whatever, that's life. I always wanted to buy Disney. I just never did it, but now I'm taking the plunge because I see opportunity. I honestly believe Disney stock could double within a year or 2 years.
Alright guys, let's talk about that Disney stock and we'll just jump right into this one. Alright ladies and gentlemen, this guy I think is utterly hilarious because Disney stock is really only up like 15%. It's really not up that much at the max on its current little upper trend here. If we take a quick peek at all this, guys, you're not talking about a whole, well, again, 11.45, but if we go back a little farther, you were getting it at a much bigger discount. Lately, Disney's been on fire. I do not personally own or like Disney stock, but that doesn't mean I'm not going to break it down for you because it might interest you, and who knows, maybe you want to make an investment in this $60 billion entertainment industry. But I'm going to break this entire stock down and then I'll give you guys my own personal opinion before I become too harsh about this company. But unfortunately, we're going to have to go through this one step at a time because I like using my Scotiabank, I like using my iTrade platform, but unfortunately, the bank's like, oh, we're doing some maintenance. You can't use that platform right now. Thank you, bank. So we're going to use Yahoo Finance. Not that I'm proud of this. I don't like using Yahoo, but everyone seems to. So let's just quickly go over this before we get into anything about the company. We're talking about a PE of 17.8, which is really low to entertainment peers. A $233 billion market cap. We all know Disney's a massive company, guys. The volume's insane. And we can take a quick peek at their financials on here. So here we're looking at total revenue increase. Well, not a whole lot. Disney is one of these companies that hasn't done a whole lot in a whole long time, guys, because as you can see over the last 5 years, we've had hardly any growth come out of this company except for the dividends. And I'm maybe just going to jump into those real quick. Usually I do this toward the end, but maybe we'll just take a quick peek at their dividends, which were really confusing in the past because just looking at this, they started doing like annual dividends. They did like 1 quarter, I guess, just to start it off in 2011. I don't know what the heck their dividends were like, but man, they were really choppy, really unusual for a Fortune 500 company to do semi-annual dividends like twice a year sort of a thing. It just seems kind of odd, but they have increased the dividend, but nothing in a staggering manner over the same 5-year term, guys. You could have been buying it in 2014, 2014 it looks like they gave, yeah, total just annual dividend. But if we take a look at 2015, 2014, you haven't seen much of an increase up till now, guys. It hasn't been anything insane, and their capital growth on their equity hasn't been that insane either. Even though they've been having some good growth on their books, it should be up, I think, a little bit. We can kind of see a bit of an uptrend over time, but if you bought it at the peaks, you've been holding flat for a while now. And essentially, if we take a quick look at their books, this is why. You can see it's from 2015, we've only seen a 52 to a 59. Their increase isn't that much. This is not like the most wild growth company in the world, but you're not buying this, in my opinion, for the growth. You're buying it for the dividend stability, and you would be buying it because this is like something you put in your portfolio, as I would define as a tank, something that's not going to go bankrupt overnight, something that's going to be around probably for your entire life and will sustain paying you some form of an income. Now, let's get into the actual company itself. I'm sure I don't want to break too much of this down. I hate everyone that goes on and on about how big Disney is. Disney's huge. It owns an insane amount, and we're going to talk a little bit more about that when we get into their books. But if we go onto the Disney website, I always find it a little odd. Disney always puts the weirdest stuff on the website. So, of course, Star Wars, they're going to nurse this sucker for as long as they can before that rain of cash starts drying up. But when I was going down here, I had no idea what this clip was. It's the first thing if you go into Disney.com. And I just want to show this to you because I think it's kind of funny. I don't know how to max the volume, but let's presume that's max. Just listen to this. What started out as friendship has grown stronger.
It's more than just a beautiful courtship ritual. Steve and Adeline will use these initial moments of intimacy to memorize each other's voices. After this, they'll be able to find one another amongst the crowds forever.
Forever. Oh my goodness. So this is promoting some kind of documentary on penguins. Because of course, penguins are cute. They're penguins. So Disney's really nursing their penguin documentary, which we can find down here. But if we scroll through Disney's website, you're not going to find any investor relations stuff on here. They're very smart about making sure this is purely about entertainment. And as we scroll through here, guys, you can see what they're involved with, all their entertainment, their movies, their music, their park travel, of course. And of course, you can scroll down and see some of their video channels like Disney Princess, Pixar, Ode to My Disney. It goes on and on and on and on. Disney's a massive company, guys, when it comes to the entertainment industry. But we're going to find out something really interesting about Disney that I didn't personally know until I started looking into this. And we're going to go into their books. And then you have to literally Google Disney financial relations because it's the WaltDisneyCompany.com that deals with just purely the investor side of things, which you wouldn't just stumble upon by Googling Disney stock. You literally have to put in Disney investor relations. It's kind of annoying. I wish there was some link at the bottom of their website here because as I scrolled down, I couldn't find anything related to their investment channel unless I'm just maybe not paying attention. Oh, maybe. Oh, right. No interest-based ads, children privacy. Yeah, I couldn't find anything on this page about their investment channels. So anyways, we're going to go over to their investor relations real quick and take a look because this is like the back end of the company. And in here we can see their reports, forms, corporate governance, investor relations. But I find it's kind of neat that they put a little philanthropy thing at the top here. And if we just take a quick peek, but they've given away over like $300 million to charities. This company's done a heck of a lot, guys. Actually, right here, $332.8 million to nonprofit organizations. I like companies that kind of engage in philanthropy. It's always nice to be around those that are giving. I wouldn't even mind giving up a tiny portion of a dividend if it goes to some sort of charity. I mean, it's nice, guys, that a company can afford to do this and that they do this. It kind of also overbounds the greediness. It kind of humbles, and it's kind of nice to be able to support as well, especially in an entertainment company that specifically deals with children. But the philanthropy on its own, guys, they do volunteering and stuff. You can sign up, whatever you want to do. But if you go into the environment, something I didn't know that was on here either is environmental impact. I guess they're really trying to be coddly these days, and they're kind of trying to show you that, oh, we're going to reduce the emissions, and I don't know, who knows. Maybe they're buying Tesla, but that looks like a massive solar panel field that looks like a mouse. I love the way they brand everything they touch. Really interesting how they do this. And I know why they put this here. I'm going to explain to you why they're talking about lowering their emissions, and it has to do with their theme park, obviously. And I'm going to get into that in a second because, like I said, I found something interesting in their book. So let's just jump into their books here, actually on their website, just in case, because you never can really trust Yahoo or any financial statements other than their website, because their website's wrong. You can actually get them fined. There's governance that goes behind that, which is interesting. But if you guys just want to take a basic look, I mean, everyone likes using this Yahoo Finance, which, again, I'm not the biggest fan of personally, but it's here. So let's just go into their cash flow and we'll see if there's any kind of comparison. Again, cash flow is like stagnating, guys. Not a whole lot going on with that, which is, again, why you haven't seen too much going on. But we just want to look at like their total current assets, or their total assets of 98 billion, almost $100 billion in assets, which isn't terrible at all, guys. And then we just want to look at the total liabilities is 44. So we got like beautiful split. I like seeing the 50-50 almost in assets versus liabilities. It's a nice thing to see. And if we go into their books as well, guys, we will see some similar stuff. But I want to just look at kind of their revenues because we can see here, again, revenues just like on that sheet is something that we saw, and it's nothing crazy impressive, especially their net income. It's nice to see that they've got their net income up a bit here, guys. We can see it's kind of been increasing, which is interesting, which means they're probably utilizing their cash from somewhere a little better. And in this page here, if you go on to the annual report, you can just pop this thing open. It shows you the dividend payments. So it's nice to see they show you the dividends. Everything in here is probably a little more accurate. So we got total assets of 98 with a B. And we scroll down, let's see what else we got here. We got the revenue, so services, products. This is where things get interesting because we can see that their services and their products make up a whopping massive amount of their income, which also seems to take up a lot of their expenses, because obviously in here, guys, where they're trying to cost of products and just what it takes to make all of this work is pretty intense. And it's nice they kind of show you the year-over-year percentage increase, which is very nice as well. And if you go into their forward presentation here, the thing that I find most interesting is they actually, this is what I was saying before, most of their income, and I didn't realize this, literally comes from their parks and experiences and consumer products. That makes up one of the largest chunks of their income, along with the media network, obviously, but I just find it more impressive that they make more money off the parks than they pretty much do anything else. And you can see that this is the loss that they had. It obviously costs way more to keep the parks open, so they're actually making more money, I think, on the media network just because it's lower maintenance to produce the content, because once you produce it once, you know, it sells almost forever. Whereas with the parks and experiences, there's maintenance, there's so much going on to keep these all maintained. I love seeing this. I find it super interesting when I can actually see where their cash flow is coming from. And Disney makes this really easy. Oh yeah, there was one more thing I wanted to show you. If we scroll up on this page, I want to show you how big ESPN is. And oh yeah, by the way, slap a like on this if you guys are enjoying this, because I've come to realize a lot of investors that I watch, they don't actually do breakdowns of the websites. They don't do breakdowns of the financial reports. Most of them are like this guy here that are buying at the top and thinking, you know, a 10-15% gain is a whole lot of money for some reason. So this guy doesn't do much of that except for, again, Yahoo Finance. Again, I wish there was more investors like this that just went in and actually showed you something of girth, like what is this company, how much money do they make, are they worth buying? Anyways, let's get right into this, and I just want to show you, before I get too worked up, I want to show you the ESPN thing, and I love the way their financial report starts with the Mickey Mouse. I wish more annual reports were as entertaining as this, and they had some cool images on the front that weren't so lame. But really quickly, this is where I find things most interesting, just because of the ESPN right here. So here we go. The company's significant cable channels and the numbers of subscribers, and estimated by Nielsen Media Research, I think is super interesting, because this is how big ESPN is. ESPN, ESPN2, ESPNU, ESPN News, Sector Network, Disney Domestic, Disney Channel, Disney Junior, Disney XD, back to international channels, ESPN, Disney Channel, Disney Junior. Like, I love, and this is in the millions of subscribers, by the way. It's so interesting that we can actually see this information on their stuff. But then there's ESPN Radio, there's ESPN Magazine, there's ESPN owns and operates the following events: ESPY Annual Awards, X Game, Winter and Summer Action Sport. Like, it goes on and on and on and on and on and on. I love how crazy big Disney is, and this is just what they own and what they're like their hotels, vacations, things like that. This is the stuff you need to spend some time and go over, guys. You can do a deeper dive yourself. Super fascinating stuff. And the reason I don't plan on ever probably owning Disney, I looked at it a lot. It has been on my watch list since the beginning of time. I've always found it an interesting company to watch. But the reason I don't own it is it doesn't pay a dividend, first of all, often enough. The dividend hasn't increased or is big enough. And on top of that, I compare Walt Disney essentially to any other entertainment stock like Netflix. I will not own Netflix. Activision, video games, I put in the same category as Disney. And the problem with this is things are fads. Everything in entertainment is a fad. When it comes to something like Star Wars, I mean, it can only capture the light for so long, and it's only going to produce a certain amount of income. And especially with Marvel, you can tell that they're nursing Marvel for every bloody dime they can. And again, that's going to have its light, and it'll have to change. They'll have to find a way to mold it, change it, or turn it into another profit machine. That is what Disney's job is. But like, if we look at Activision, guys, it was up there. It was killing it. They had so many games coming out that were just on fire. And then all of a sudden, things weren't working out too well. You know, we have Fortnite now killing every game pretty much out there, and it's a free download on top of that. And the funny thing about that is, if you wanted to say get into the hype, like Disney's under hype right now because of the streaming service that's about to come out, which I was right here in the news that I was pointing out. If you can get into the hype early enough, yeah, you can make some money off hype. Absolutely, it's a great way. It's how I made money on the marijuana industry, guys. If you can beat the hype, you can make money. And especially with video games, if we look into something, say, like Nintendo. This was the Pokemon Go hype, by the way. If you bought Pokemon Go when it came out, or not bought, but downloaded the game on your phone, that was what brought this hype. And if you bought it anytime just in the beginning of that, you would have done amazingly well. Fortnite is, if you wanted to invest in that hype, well, you wouldn't have done so well because Tencent Holdings owns 43% of the company that owns Fortnite. And I got to remember what that company's name was because I'm blanking as I break this down for you guys. But anyways, Tencent owns like a 50% stake in basically Fortnite. But the problem is look at the size of this bloody company. 312.7 billion, guys. Crazy, massive company. And it's going to take a hell of a lot more than Fortnite. Fortnite could gross like $2 billion, and that would barely put a dent on this company, like on its market cap. This is a massive company, guys, and Fortnite's not going to do you enough to see this company rise. This company's clearly involved in a lot. Tencent Holdings, a limited Chinese multinational investment holding conglomerate founded in 1998, whose subsidiaries specialize in various internet-related services and products. Very interesting, guys. So as this video I showed you in the beginning with this kid, I guess, is buying Disney stock on the hype, I think he's absolutely absurd and insane. You don't buy stocks when they're at their peak, especially on a run, unless you're planning on getting in and getting out really early and you're doing it for a trade. This is a bad time to be buying Disney, in my opinion. It hasn't proved that its streaming service is going to be successful. It seems like it may be, but to what extent will that be? We won't know until it happens. So right now it's all just hearsay. I do think Disney's been falling behind a little bit. Like, it should be up more than this, in my opinion. I do think it's undervalued when it was sitting around here, because again, the revenues are increasing, the bottom line's increasing, the market cap is getting up there. You know, you're seeing the PE ratio come down. So I mean, I don't know why it has been leveling, but it's nice to see it probably getting into some realistic valuations. But at this point, I wouldn't be buying it. This is the first peak it's had in 5 years, and you're buying it at the top. You'd be nuts. But that's just my personal opinion. You guys can always let me know in the comments section below. I hope you enjoyed this breakdown. Just something fun, different today, guys. Stay cool, stay awesome, and I look forward to seeing you tomorrow.